Journey of a commercial property investor. In this video, I am going to talk about how an investors transition into commercial property investing. So let's start. So journey of a commercial property investor starts with investing, right? Now, how does an investor, start investing? By investing into, I think, in the market or in the share market, or buying, if you are into properties, then you buy into a residential property. So a journey of a commercial property investor starts with investing, and the first part is the residential property investing. Now, when we buy our first residential properties as an investor, then perhaps we don't even know much about residential property investing. We just know that buy a property is going to grow up, and my friends, families, others, they have bought the property or they are buying, so hence I can buy, and this is most of the scenario. Then the investor buys a residential property, which as soon as it buys, then of course the rent is coming, but it is a negative cash flow property. And because it is negative cash flow property, it is losing money, and then in order to lose more money, they want to buy another residential property. And this is how they transition from buying one residential property, then they go to the second residential properties. And this is fantastic, great, right? You now own two residential properties, and then perhaps a couple of years time, then they buy, they learn a little bit more about residential property, buy probably third residential properties, or maybe fourth, or maybe fifth, and then at one point of time we are stuck in the way the investor is like, and now that I learned about residential property, now that I learned about investing, and I can see that it's clearly not working, because yes, it is giving me growth, but there is no income. I'm losing money. Because I'm losing money, the whole purpose of investing is to make money is gone. It's not there. So then the investor is looking for an alternatives, and what is the alternative is to find a positive cash flow property. And with residential, they try hard with different types of properties, like specialized, room by room accommodation, or like NDIS, or any kind of boarding house on different style of properties. But then every angle, it looks like it's a lot of management, a lot of activity that you have to active things that you have to do, and then the investor is stuck, right? Not getting cash flow. And that's the time this investor then learn about commercial property, and then they already have that equity, they tap those equity and move into commercial property. Here is an important part. This investor, as soon as they buy the first commercial property, then they realize that, wow, this is working, because now that it is giving me cash flow, which it was not giving earlier. All these properties that they bought with residential properties not giving enough cash flow, whereas the commercial property, as soon as it bought, it is giving more cash flow. And then the mindset is getting shifted. So that is now that investor is looking that, okay, how can I buy more commercial property, and how I can get rid of these residential properties, so that way I can focus more into cash flow, because growth itself is not enough. And this is something that I want to interject here, is that as an investor, knowing that what I know now, I would not have started into residential property, because this residential property, even though it has grown, if I would have started commercial from day one, then I do not have to sell those properties, residential properties, because unless I sell, I'm not getting that cash flow back. Or in order to sell, then I have to pay the capital gain tax and again stamp duty and all sort of things. But if I would have bought that property, commercial property, from day one, and then held enough, I would not have to sell that commercial property. As long as it is making cash flow, I would never sell. And this is the investing principle. If you see that wealthy people, they do not think about selling. But with residential, we are kind of stuck. Unless we sell, we can't tap the equity and make that into commercial, because of so many factors, it is not giving that enough cash flow. So now the journey moves to the commercial property purchase one property, and then tapping the equity, by the second one and the third one. But then the challenge is that even though we are taking 100% loan, so in this case, that commercial property investor, now that he's a commercial property investor, he is buying into, like, let's say taking 100% loan, and it's still making positive cash flow. The fact that you are taking 100% loan, it's not too much positive cash flow. So in other words, let's say if you're buying $1 million property, which is giving you 70,000 net return, and if it is a whole 100% loan, which is 60,000 is going to the mortgage payment and some other cost here and there, so you're keeping probably $5,000 to $7,000 in a year. That's not enough. Then the investor's next question is that, okay, how can I release some of this equity from residential, which is not making money, and then tap into in commercial and get better? So again, with this example, like let's say if this investor has 2 or 3 commercial property, and that time they think about selling those residential, tap the equity and get that cash flow, which I call is actually a phase where you bump up your cash flow drastically. And this is the journey of a commercial property investor, because there are very few, I'm yet to know few people who actually started directly in commercial, because as I said that when we start we don't know much, and it was the case even for myself as well. But once you know that the commercial property, then you certainly realize that how it makes positive cash flow, how it gives you more and more, and you don't have to hold this residential because of the commercial is getting enough cash flow. Now it's very difficult to understand unless you actually own the commercial property, because your mindset is that selling something means getting rid of, and buying a property itself is hard and selling is even harder. It's simply because like you have emotion attached and all sort of things, which is why you try to keep it. And my suggestions here would be, if you are in this position, if you are an investor who has a lot of residential properties and want to perhaps transition into commercial, the best way to do this is to keep this residential, take that 100% loan and go to commercial property. And then once you buy 1 or 2 or 3, then you yourself would be motivated enough to get rid of one of your low performing residential property, because that's the way you can increase your cash flow. Now, of course, there are so many different strategies, personal circumstances, how much tax you're paying, what's your personal income or the business income, so many different things. But hopefully this can give you an idea about how people transition from residential to commercial, or a journey of a commercial property investor. I hope you find this video is helpful and gives you some sort of trigger point that what normally people do as a commercial property investor. If you like this, please subscribe this channel, so it gives you a lots of motivation for me, and it also help you to get more and more updates from us, and it also be in a position that we can get motivated and create more videos, and hopefully that will be more and more helpful for you. Thank you so much, and I will see you next time. Bye bye.